Hello, warm welcome to the program. Ahead, we'll speak with Alice Manners, Chief Executive of the Internet Advertising Bureau, about audience growth and advertising in digital. Plus, we'll take a look at just how Fairfax Media's domain has changed its model. But first, reporting season is underway, which means we're getting a view on just how media companies are tracking. APN News and Media has posted a sharp rise in net profit, up close to 340%. The company's saying radio acquisitions really helped to drive its result, boosted by Kyle and Jackie O's move to ARN from Southern Cross Stereo.
It's a combination of aspects. It was the relaunch of the WSFM Gold station in Sydney with Amanda Keller, and particularly, that show particularly finished #1 in terms of as a network or day part. Kiss in the morning in Sydney finished #1 at the end of the year. So to go from the 6th and the 4th stations in 2013 to be #1 and #2 in Sydney definitely has been part of the uplift. Extending those learnings into Melbourne into 2015, where we've recently relaunched the mix station to KISS 101.1 with Matt Tilley and Jane Hall, and the launch of our National Drive program with Dave Hughes and Kate Lambrook.
And despite analysts saying APN News and Media is now primarily a radio business with a bit of print on the side, Mr Miller argues that's not the case, with APN still diversified across media assets.
We see it as being a media business. We're a media company. We're focusing particularly in New Zealand, but more so in Australia, in 2015 more so in Australia, about how we give advertisers campaign solutions across our various media assets. This time last year, 44% of our assets were in growth assets, where today it's over 60%. So while we've increased our investment in radio, we don't see ourselves as being a radio business or a print business. We see ourselves as being a media business, and we see our growth in how we look at those assets particularly together.
Meantime, Telstra also unveiling results, and that's given the media sector a view of Foxtel, which is 50% owned by Telstra and News Corp. Foxtel boosting subscribers after slashing the cost of a basic cable package in half, with customer numbers lifting by 4.7%. The telco also adding that it's well positioned in its plans for its new set-top box launch, IQ3.
It has also been a very important time for Foxtel strategically. The new subscription video on demand service, Presto, was launched in March of last year, and the new pricing and packaging model, as I mentioned, was launched in November. Since the half year, Foxtel has also launched a triple play broadband service and is well advanced in its preparations for its new set-top box launch, the IQ3. These initiatives will be important in underpinning growth in the future.
For more, our co-host James Manning, editor and publisher of Mediaweek, is with us now in the studio. James, great to have your company on the show.
Hi, Greg.
So just talk us through what you found out of the Telstra sort of Foxtel numbers.
Yeah, it was good. Look, I think the result, Foxtel, $1.7 billion revenue, EBITDA just under $500 million. So we're still talking big numbers, aren't we? Customer growth, 118,000 people, which was good. It came up on the News Corp conference call last Friday morning, and Robert Thompson, I think, was talking about Foxtel growth, and he said, look, there's been a big surge in new subscribers, which is all good news since that price drop.
Yes,
so I think we'll see a lot of that come through into this financial year. There's a big marketing push on now for the cricket, the World Cup. They've got the dedicated channel. It's the only place to see every match. That'll roll into the NRL and AFL seasons, where those customers can get it all. I think for a $50 deal, they're being offered, a pretty big package of programming. So we'll think that'll help their figures too. He talked about the IQ3. Look, it has been delayed. We still don't have a definite date, but look, when it gets here, it could be a game changer, but it's still that question about when exactly it will get here.
Yeah, all they said was it was on track, so we'll find out. APN News and Media as well out with results this week, and a pretty big increase for them, although it did sort of miss analyst expectations. What did you think of the broader result?
Yeah, look, it's good news. I think, $75 million net profit, up 27%. Year of consolidation with the radio. They took over the Clear Channel shareholding completely at the start of the year. Added 96 FM in Perth. Yeah, look, it's $180 million. It's been a great year for them. The radio revenue plus 18%. Agency revenue up 32%. A lot of people said, look, when they got Kyle and Jackie over, they might be able to monetise it as well as, their previous home, Southern Cross Austereo, did. But, they've seemed to have proved people wrong with 32% increase in agency revenue. So they are making money on their new acquisitions in talent. They've signed up a bunch of great people for Melbourne that Michael Miller was talking about, launched the station officially to advertisers down there last night. I got to spend a bit of time with their radio team. They're all good people doing good work. So, I think we'll see that growth continue this year.
All right, well, let's get a bit of a stock market perspective now on this with Evan Lucas. He joins us from IG. Evan, great to have your company on the show. Just get your view on Telstra, kicking it off with Telstra.
Yep.
How much does Foxtel's performance actually help drive that result?
A little bit. I think more what you've got to read into it is how Telstra is monetising Foxtel, so the other way around, and the fact that they saw mobile user growth growing by 9.3%, and the fact they are now really pushing particularly that online content from Foxtel into those mobile users is where you're seeing the growth. It was a really, really solid number. There's no doubt about that. The figures that you saw coming out of Telstra were good. First time it crossed actually the 2 billion mark for the net profit, so it was very nice. But the Foxtel part is more the reverse, the fact that they are now getting users to subscribe through their mobile usage, and mobile usage, as I said, was now 9.3% up, and their total service usage across the country, they added 366,000 new domestic customers to service 16.2. So there is such a broad scope to start making it from being a communications company into a multimedia company, and why David Thodey is so excited by that join-up that they have with Foxtel and integrating that into their mobile service.
Sort of mixed thoughts on APN News and Media results. Triple-digit percentage growth in profit, but off a pretty low base, right?
Yeah, very low base and not hard to see. Look, James's points are very well made, and they're very clear that certainly the Kyle and Jackie show has been there. They're as much as what obviously the CEO was talking about with that, they are a media company. There's no doubt the radio growth has been there. The biggest concern that the market always has is their debt, and it is large at $457.8 million, and it's why he didn't get any form of dividend in FY14, and looks like he won't do it in this financial year either. So it's a good number, it's solid, and yes, the growth numbers for the last half of this year were solid, but again, it's the debt is high. The reaction from the market also shows you that that's the concern. Absolutely no movement whatsoever when the data drops. So it's a good number, I agree. The growth is coming and it's stabilising, but debt is still very large. Also, the fact they didn't shell off their New Zealand assets is also an interesting one. They've shelved that for 12 months. New Zealand is growing, but again, I think it's actually looking like it may not have got up as well as they wanted to, considering that their paper assets are still fairly poor.
All right, Evan, thanks so much for that update.
Thanks, guys.
Evan Lucas there from IG. And as we see Telstra's results and the solid growth it's had in mobile subscribers, it really just highlights how strong the structural shift is between print media and the more digital based. We'll discuss online advertising in more detail. We're joined by Alice Manners, Chief Executive of Internet Advertising Bureau Australia. Alice, great to have you on the show today.
For having me.
So just tell us a bit, I guess, kick it off with some of the most crucial things that the Internet Advertising Bureau does.
So, one, we track online ad revenues, and last year was a fantastic year because for the first time we surpassed television advertising revenues, which was interesting. The other area which really reinforces that is around online audience measurement, because you need that to support the investment that goes in it, and anything really around interactive advertising. I guess the challenge is that gets broader and changes every day with what we do.
Before we dig into revenue and, audience measurement, just tell us, now you represent most of the major players in the market. Who's not on board that you'd like to get on?
Look, when we first started, IAB was very much a publisher association. Last year, and when I started, which was about 18 months ago, we looked at changing that because we had advanced so far. So we need to represent the entire industry. So our positioning now is around Big Tent. We have publishers, we have marketers, we have technology companies, as well as agencies as part of that mix. So we need everyone involved now. So
if you're talking dollars of the billions that it earns, how much of that revenue is represented by your members? Sort of, we're talking 80, 90%?
I think
not quite as much, but up there somewhere?
Yeah, up there definitely.
Yeah.
Give us some more colour about the growth, the revenue growth you saw in the past sort of year.
So the revenue growth, our two stars are mobile and video. They're definitely rising and will continue to. And the best way to put it is not in percentages, but how it compares to other mediums. So mobile now as a total has surpassed total magazines as well as outdoor. Video has surpassed cinema or double cinema. So it shows you that marketers now are confident to invest in digital, which is a fantastic place to be.
Alice, I think your last reported numbers were September quarter, 1.2 billion. Are we on track for 5 billion? Are we going to crack that one soon?
We are. I'm slightly bullish. So we ended up last financial year at 4.4 billion. I'm comfortable we're going to get very close to 5 billion with that. So at the moment we're at about $4 in $10 of advertising dollars go to digital. We're going to keep pushing that forward, which brings us to new interesting challenges.
But is it a challenge to continue to grow that momentum as well, given such the strength in momentum you've seen over the past couple of years?
Absolutely. I mean, if you think last year on year, it was 22% growth. Every year it's in those high 20s. To continue that momentum needs to show that proof in the medium, and it's constantly changing in terms of the different formats that happen there. So what we talk about now, it's no longer about just being the biggest or the best. It's about how we work cross-platform with television or with other mediums to continue the growth.
You talk about the $4 in $10 being spent in your sector. We've had some people come in here and say, look, there has been the rush to digital has been too much. They've abandoned some other media too quickly. I mean, that's usually people from more traditional media, but we've had some media people saying too, yeah, look, we need to be very careful about where we're spending. So are your members aware of that it could be a pullback at some stage?
I mean, there are certain things from a global perspective that we need to manage, and as the IAB in Australia, we look at them specifically for this market. So when you look at brand safety and what comes around that to ensure that marketers are confident in investing in the medium, because as with every industry there's an element of fraud, so that's a very high priority for us. Measurement has been key to what we do, and that's where the IAB is invested heavily. So a lot of when we look at audience measurement, so what people are doing online has been very much around desktop. Now, we know a lot of our publishers have over 75% of their traffic coming from mobile. That's huge. That's a huge number, but we weren't able to measure it. So we've invested a lot of money into that piece to be able to show measurement across your mobile phone, across a tablet as well as a desktop, and continue to do that. And when we have those proof points for marketers and agencies, we see that flow of investment continue.
Just talk to us a bit about mobile as well. I mean, that's no doubt giving your members much bigger audiences, but it comes with challenges, right?
Of course it does. So the two challenges are, one, if you look at consumer usage, it's really high, as I mentioned. If you look at investment, it is somewhat lower. And there's nothing wrong with that. A marketer needs those proof points. So the first one was to be able to measure it, which we've done. And through Nielsen, who's our Australian currency for measurement, we're moving towards, by the middle of this year, being able to give a marketer one number which represents across all of those three devices. The other one is still around creative. That's a challenge because the mobile device is very different to the desktop. So how do you be relevant and not be creepy? And I think the one challenge for marketers now is I don't think enough people are leveraging location-based targeting. I think that's the beauty of mobile, and hopefully 2015 we'll see more of it.
Why do we have to wait till 2016 for daily ratings? I mean, one of TV's big selling points is you get the ratings every morning,
right.
9 o'clock. Why
That's
can't
right.
you do it quicker?
What I've learnt since joining the IAB is that measurement is a very substantial investment, and we have so much data. It's important to make sure that we get the right data into people's hands. So no other market has done this, and I think that's the other beautiful thing about Australia. We're ahead of the rest of the world. There is only one other market in the globe that's anywhere near us in terms of what we expect and demand from online audience measurement. And it's not the US, it's actually Italy, of all places.
Really? So is education still a big part of it going forward, just educating people on digital?
Completely, because you have new, different opportunities arrive. So what does native mean? What does programmatic mean? And you constantly, we're great in terms of we have these buzzwords and new things, but we shoot ourselves in the foot a little bit. So education will always need to be there.
And do you give advice to your members on quoting their audience numbers? Gee, we get some so many different numbers. You get, uniques, and you get Australian uniques, and you get browsers, and you get time spent on pages and all this sort of stuff. Do you have guidelines for them?
We
or
do.
If they're a member, they can just...
We do, and for the entire industry, and it's a big part of what we do. And sometimes I get in trouble because I say it might be the dull bit, but it's the critical bit of what we do, because people need those standards and guidelines. And that's why we have a currency. Some people see currency as a bit of a dirty word, but really we need that, because put it into context to other mediums, it's still very new as what it is, and we'll continue to need that.
Crucial couple of years for the industry. Alice, thanks so much for joining us on the show today. Alice Manners there, Chief Executive of IAB Australia. We do have to take a quick break now on Media Week. Coming up next, though, we'll check in on the ratings for Week 6. Plus, Fairfax Media successfully negotiates the joint venture with Huffington Post. We'll bring you more details next.